Welcome back to Teshkid FX for another Hbar price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Hbar chart, which has continued to hold above a key area of support at around the $0.0639 mark. We have also continued to hold above the 20-day MA, and I also have a chart pattern that is on the 1-hour chart which could possibly give us a breakout to the upper side. And before I get further into the technical analysis and also give you my next target areas, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to start the video here on the daily chart by first giving you the long-term scenarios, where you can see that Hbar, from these low prices that we had been trading within, we saw a very nice bounce to the upside, making it to an all-time high at around the $0.58 mark, in what I'm terming as the formation of that first wave to the upside. And after seeing the all-time high, we started the bear market, where we had been seeing no prices in this ABC corrective structure, which has now taken us back to around the $0.0356 mark, in what I'm terming is the formation of that wave 2. And after seeing the low for this second wave, whatever we expect next is a bounce to the upside in the formation of this wave 3. And here on the daily chart, you can see that I have a target area in the formation of that wave 3 at the fib level 1.618, and that is at around the $0.9768 mark, and that is the minimum that I'm expecting Hbar to do on the long-term scenarios. And jumping to the 1-hour chart to give you the short-term scenarios that I'm expecting to play out, and also a chart pattern that we have information over here. You can see that here on the 1-hour chart, after making our low at around the $0.0356 mark, we started a very nice bounce to the upside, obeying the Elliot wave structures, where we have seen the formation of that wave 1, then we have seen the formation of a second wave, then seen a massive pump to the upside in the formation of that wave 3, then we have seen a retracement in the formation of this wave 4, and I believe whatever we are seeing at the moment could be a bounce to the upside in the formation of this wave 5. And before I give you my next target areas in the formation of this wave 5, allow me to first show you that this fourth wave right here has done the minimum that we expect a wave 4 to the lower side to do, by connecting the Fibonacci's from the low of the second wave to the high of that wave 3, and that gives me a minimum retracement area in the formation of that wave 4 between the fib level 0.382 and the fib level 0.5, and that target area lies between the $0.0638 mark and the $0.0586 mark, and that is the minimum that I expected that fourth wave to the lower side to do. And once the fourth wave plays out, then we can expect a massive bounce to the upside in the formation of this wave 5, and sketching out a minimum target area to the upside in the formation of this wave 5 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of that wave 3. That gives me a minimum target area to the upside in the formation of that wave 5 at the fib level 1.618, and that is at around the $0.0874 mark, and that is just a minimum target area to the upside, so there are chances of managing to break above the fib level 1.618. And also giving you the chart pattern that we have information over here, which is fully supporting the formation of this wave 5 to the upside. We can first connect these lows that we made down here, because the chart pattern is a double bottom, so we can connect these bottoms like that. And once we do that, then I can draw out the chart pattern, where we can have these as the first bottom, then you have seen the formation of the neckline, then the second bottom, and I believe whatever we are seeing over here could be the start of the breakout to the upper side. And this is a chart pattern that normally breaks to the upper side, having the minimum target area of the breakout being given by the height between the neckline and the bottoms, so we can get that height and then place it above the neckline, and that gives me a minimum target area back to around the $0.0802 mark. So there are chances that in case we see the breakout out of this chart pattern, we might continue pushing even higher, given the support of the 20-day MA here on the 4-hour chart, continue pushing higher, get back to the next key area of resistance at around the $0.0808 mark, and a break above the $0.0808, which is also the wave 3 high, that could trigger even higher prices to continue pushing even higher and fully maximize our target areas to the upside in the formation of this wave 5. So that is what I'm expecting on the short-term scenarios. And giving you a worst case scenario, we also need to have in mind that we can invalidate all these structures that we have right here because we did not fully maximize the formation of this wave 4 by fully getting into this red target area. So in case we lose the 20-day MA and continue pushing lower, maybe in a straight sell-off to the lower side to get back into this red target area, then we can say that we are going to make one more low in the formation of that wave 4 before we can expect that bounce to the upside in the formation of that wave 5. But at the time of this recording, I'm in favor of having seen the low for this fourth wave, and whatever we are seeing at the moment is the start of a bounce to the upside in the formation of that wave 5. So let's be patient and see how that plays out, and I'll be keeping you updated.